Hello, Mavericks. How's it going? This is Rob Reinhold, joined as always by Mr. Ankush Sharma, and this is the Currency Room for May 8th to May 13th. We just got through the first week of the month, which we always have a ton of news, and boy, did we ever have a ton of news this week. We had 3 central banks come out, and they all raised interest rates. The RBA hiked rates by 25 basis points, which was a little bit more than the market expected. The FOMC hiked rates by 50 basis points, and the Bank of England hiked rates by 25 basis points. Big news last week. We got a big run right after the FOMC meeting and then a huge fall on Thursday. And by the end of the week, we closed lower for the week, which is the 5th straight week of losses in the markets. Another thing that just was really weighing on equity markets was the bond yields. I heard some statistics that just kind of blew my mind. Stuff like, the German Bund is above 1% for the first time since like 2015, something like that. We're above 3%, and that's the highest since November 2018. So this is like 4 or 5 years. This is a big chunk of time that we've had very low interest rates. So we all know that that's changing. We all know that all the central banks are really trying to fight inflation. And the big question is, are they going to kill the economies with this higher interest rates? And so when we take a look at the economic reports, it doesn't really show that it's killing the economy. U.S. employment came in better than expected, and Canadian employment came in a little bit worse than expected. But ultimately, the economies are still strong when we take a look at the underlying numbers. Now look, they are slowing a little bit, which is again another reason why equities are coming down. But as far as, when you take a look at the economy, you got to say, okay, the economy is okay, but the market is sick. So let's talk about what happened exactly by the numbers last week. The S&P down 0.5%, the world index VT down 1.5%. So world equities were much weaker than U.S. equities. Cryptos got killed. We've been bearish cryptos for a while, and there doesn't seem to be any hope right now for cryptos on the long side. So we still don't like them. Gold was about flat, and oil actually had an up week. So let's take a look at the charts here. Let's look and see, where are we on the end of the week here. We are just breaking below some pretty big support levels. And you can see that, we had a lot of hope on Wednesday's close. Thursday just absolutely took that rally and just shot it, just killed it. And then Friday, we tried to bounce, and at one point we were positive. And by the end of the day, it just is negative. Okay, so we are definitely breaking below lows and going to new lows. Last week, I talked about how we didn't think we were at a low because we didn't get capitulation. What capitulation is forced panic selling with the spike in the volatility index. And we said, hey, we haven't seen this yet, and so we don't think there's a bottom yet. We're seeing this. We're starting to see it right here, right now. Thursday's candle, NASDAQ down 5.5%. It was just panic selling and dumping and forced liquidation from margin calls. Friday wasn't any better. And so this is likely to carry over into the first of next week. However, when you get to these extreme readings, you have to, I say you need your hairs on the back of your neck to stand up and say, hey, when we get to these extreme readings, this is typically where we see a change. And it works the same way when things are really, really bullish and it's just so euphoric. The hairs on the back of your neck should stand up as well. Be like, hey, when we get to these extreme levels, we need to be cautious here. So I think we got a couple more down days, and then we probably get a decent, what we call a tradable bounce, which is a bounce that's big enough to make some money off. This over here was a tradable bounce. That was like 8 or 9% in the S&P 500 off of the low we set in March. So I think we got a little bit more down. Anka, what's your call here on U.S. equities?
Hey, Rob. Well, I'm definitely in with you on your outlook there. I mean, we are definitely getting to the point, especially after this failed rally that we saw after the FOMC. Everybody was really focused on the Fed rate hike. And I must say that the Powell did a really good job not freaking out the markets and even, start to kind of push off on that another 75 basis point hike in the next meeting. So market reacted really well. And I think that was the last straw for a lot of traders. Everybody was focusing on the FOMC. And that failed rally has really started to create some panic in traders. So I do agree that we are seeing that price action and the VIX. When we look at the VIX, we are at this levels that we were actually back in February. So we're hitting some highs there, and I think this is definitely a perfect recipe to look for some sort of market bottom. It's not really right now at this point, but I think it's something that we need to start looking for. We are in the 5th straight week down, and as we look at statistics, I mean, we are living in this uncharted territory that, we haven't really seen normally market behave this way. So I think cautious on the short side, and but I think this is where we're likely to see this roller coaster move, and eventually we'll see the market bottom out or start to show us the bottoming price action, which could be coming next week. So we'll have to wait and see how the market reacts. But I think it's good to prepare for it as of now.
Very, very wise words. I think, again, as Anka said, we have to start thinking and talking about when this does bottom. Until then, it's down. It's down. Now, we liked the dollar at the first of last week, and it wasn't the best currency, but it was definitely a very strong currency. And we liked the CAD as well. So dollar and CAD we liked. You can see they were both up, CAD only up slightly. But we really liked the pound and the Kiwi on the short side. And you can see that pound was a great trade here. We had a lot of traders that were short pound, which was great. Fell quite a bit after the Bank of England released their rate statement. Now, the Aussie had that better than expected rate hike, and that really helped it this week. The Aussie dollar has been stronger than the Kiwi, much stronger. When you look at that pairing, there's no question. But the Aussie has still been one of the weaker currencies out there. It got a bid this week. I actually think the Aussie is very shortable going into next week. We'll take a look at some charts here on that. Cryptos, again, we've been so bearish on them, and I don't see any reason why that should change. These are risk-on assets. I know a lot of people have been trying to make the case, no, these are the new gold, they're a currency of safety. Well, when they act exactly like a risk-on asset acts, if it walks like a duck and talks like a duck, it's a duck. So these are risk assets, and right now risk assets are not being bought. So when we take a look at all of the charts, and we took a look at the S&P. Let's take a look at the VT. The VT looking a little bit better, but you can see here, still on the downside. So we still think there's some more pain to go there. Here's the crypto basket. And last week we talked about how it was down at some critical support. And you can see we've broken through that to the downside. Now, cryptos look bad here. There's no question about it. Last week, we had a very busy week on the calendar, and this week, not so much. As you can see, we do have a little bit of central bank speak early in the week, but really the only tradable report here is the US CPI that comes out on Wednesday. And then everything else after that, you can just kind of ignore. So for those of you looking to trade a news announcement, really Wednesday at US CPI at 8:30 a.m. is really the only trade out there. So this week, we likely see more downside. And if it gets bad, then I think we're even closer to a bottom. Remember, bottoms are made when everyone throws in the towel. When everyone says, I can't take any more, I'm out. So the closer we get to that, then the closer we are to a bottom. But until then, downside is highly likely. And then again, US CPI on Wednesday. So let's take a look at each currency one by one. We're going to start off with the cryptos like we always do. And I'm going to go through them pretty quickly here because, spoiler alert, they're all going lower. They're all breaking down. So here's Bitcoin. There's nothing good about this chart. Everything's down. So Bitcoin is definitely not a long, and it is a short if you can short currencies. Bitcoin Cash, same thing, breaking below some key levels here. Just not looking good. So -3s, -2s all over the place. This is Ethereum. And I said last week that out of all of the cryptos, Ethereum was performing the best, but it still was a sell. And you can see we are still quite a bit off of our March bottoms on Ethereum. And so look, relatively speaking, when you take a look at Ethereum compared to Bitcoin and Litecoin and Bitcoin Cash and some others, it's going down the least. Now, all that tells us is when they do turn, then Ethereum is likely to lead. It's likely to be the biggest performer because it had the most strength on the way down. It's very typical to see that. But it's nothing but a sell here. Litecoin, breaking down, it's just nothing but a sell. So cryptos are all a sell. We come to take a look at Forex. Let's start off with the dollar. Now, we've liked the dollar ever since this breakout. And boy, the dollar has just been a great trade. So great job to all of our traders who've been long dollar. It's been a very steady. These slow, steady trends are really fun to trade because then you can do some pyramiding. Then you can hold multiple days because there is really stable price movement to the upside. So we've got nothing but positive things to say here about the dollar. And take a look at this base. So we are heading into this next week with a base that's really been in place for 6 or 7 days. And it looks like we're trying to break out of the top of that here. So this is nothing but a bullish signal. So we are definitely still bullish on dollar. Now, in any other period of time, this yen would be soaring. Oh, really, since I started currency trading in 2006, ever since that time, the yen has been the thing that people ran to. And if this happened 2 years ago, well, I mean, remember when COVID hit? 2 years ago, the yen skyrocketed. It just spiked. Right now, the yen is broken. And it was broken by the Bank of Japan. They crushed this. They came out to the markets. And this move right here was, we will print endless amounts of money, is what they told the market. And the market definitely didn't like that. So you can see here, the yen's broken. The fact that it hasn't gone up on a week that the market was under turmoil just tells you can't be long yen. It's a very tough trade. What it does tell you is that if and when we bottom, the yen is the best short. Absolutely. So right here, right now, it's basically mixed, going nowhere. We like it better as a short when the equity markets do bounce. Anka, do you have any insights on the yen here?
Hey, Rob. Well, good point on the yen. And again, this thing has run a lot. Like if you look at whole March and April, this thing is all taking a pause. But one thing to note here is that the kind of momentum where we were in, the momentum has really flattened out, which means that it's not really a long, it's not really a short at this point for me. I mean, as long as it stays where it is, I think it needs to break either on the upside. We got that rally at the end of April. I think that rally at the end of April, and we're just kind of the midpoint of that rally. So at this point, I think we can just draw the lines and say, well, if it's actually drops below the April 18th low, and I think the short trade is back on. But if we start to break above the high that we saw on April 26th, then we know maybe this is going for a rebound. But at this point, I think that trade that was such a fantastic, just like how the US dollar is moving, I would say the exact same way we saw the yen moving. It was moving day by day. It was a nice directional move. But right now, that trade is over, I think. It's just on a pause. Not really interested. I think there's definitely other currencies that are making a bigger move, but something we need to pay attention to as far as the watch list goes. But I'm not really ready to jump on it on either direction on this one.
Totally agree. Here's Swiss franc. And Swiss franc, again, is another currency that usually does better when the market's under turmoil and stress. And you can see it's not working. It's just not working here. So we're not an all-out sell and a short here on the Swiss franc, but it is one of the weaker currencies right now. Now, we typically see some pretty high correlation between euro and Swiss franc. And right now, euro and Swiss franc are really going different directions. And in fact, the euro is really looking like it wants to go higher. We've got some early signs of a bottoming process. So I'm going to draw this trend line here. We've got the 20-period moving average starting to go higher, crossing above the 50. If we can break out of this resistance, this is an all-out green light on long euro. It's surprising. You can probably write a whole paper on why the euro should be going lower, but on a chart, it's telling us it's gathering some strength and some momentum. It's not there yet. We're still to 0 on the trend score. It needs to prove it to us, but if it does break out, then I think it's definitely an in-play currency. We liked the pound short last week. I talked about how Friday's candle was a great bear rally to sell into, and great job to all of our traders this week. You can see we dropped down to a new low. Now we could easily bounce here. Would not surprise me at all, or base. But ultimately, I'm still liking pound on the short side. Going to CAD. CAD really didn't do anything this week. And the best thing you can say for CAD is that it held in there. Hey, good job, buddy. You held in there. Will this go higher? It is in a high base, and high bases tend to break to the upside. But when I take a look at, the energy, what's got the energy right here, right now, when CAD gets this energy, this is when you want to play it. But when it loses it, it's when you don't want to play it. I'm going to have to wait for a breakout of a high base here before I can get excited on CAD. It's on my radar. It's absolutely on my radar, but until it comes out of this, 6 or 7 day sideways funk it's been in, it's not a tradable currency at the moment. Coming over to the Aussie. Now the Aussie had that big bounce, and it was a multi-day bounce. It definitely had some power behind it. But you could see here, when the market got ugly, the risk-off move became stronger than the extra basis point hike that the RBA gave, and it sunk down. This is not my favorite short, but it is maybe going to be next week, possibly. I do think it's going to go lower. The question is it going to go lower more than the pound? And is it going to go lower faster than the Kiwi? And the answer is probably not. They are much better sells. Kiwi here has been bottomed out for about 5 days and look how pathetic. The one up day it can muster, it wasn't even that strong of a move, and it just got erased the next day. So we like Kiwi on the short side. Kiwi is, again, my favorite short. It was my favorite short last week. It's my favorite short here. The pound is very close, but I'm going to put the pound in second position. When we take a look at all these currencies stacked up on the trend scores, okay, which currencies are trending? We've got clear outperformers in the dollar and the CAD. Now look, the dollar is, we'll take a look at let's look at the next slide. The CAD is showing no velocity at the moment. It's showing a strong trend, but no velocity, where the dollar is showing us a nice bit of velocity. So we like the dollar CAD trending higher. And then if you take a look and see, okay, what's trending lower? It's all the cryptos, Swiss franc, pound, and Kiwi. Now, what's moving now? And this is where we get into our velocity score. What has the velocity now? Well, we have a very strong bit of downside velocity in cryptos. And that's why we're so negative on the cryptos, is that there's just a ton of negative velocity on them. The dollar is showing us some really good velocity. It's saying right here, right now, it's moving, and it's moving to the upside and actually breaking out of a 5-day base. The problem is we don't have anything really trending lower at the moment. We got other things that are weak, things that we're watching, but Kiwi is a 0, pound is a 0. These are the things I wanted to look to enter early in the week as shorts, and it's telling me, hey, they're not moving yet. They may be moving next week. We'll take a look at them. But right here, right now, I'm really going into this next week, early in the week, saying, okay, I probably need to wait a day before I can get some better velocity, before I can make a trade. Euro. I think euro, like I said, if we can break out above that resistance we looked at, I think the euro is absolutely in play on the long side. So we're just going to have to wait and see. So ultimately, right now we're looking at dollar-CAD on the long side, bearish trades, Kiwi, Aussie, and I'm going to add the pound in there too. Let's take a look at a couple possible trades here. Now, we're going to start off with the currencies that we just ran down. We do this relative strength exercise for a reason. We're going to look at the strongest currencies against the weakest currencies. And we took a look at them and said, okay, well, the first one on the list is Kiwi dollar. So let's take a look at it. All right, entering Kiwi dollar here. I'm going to look at a 4-hour chart. Well, let's do the progression. Let's start at the daily chart. And the daily chart, again, looking really brutal here. We are trading at lows that we haven't seen in years. So lots of downside momentum here. And you can see it looks like we just had that one little day pop and then it's turned right back down. And we're going to close on the lows here. So I like this currency pair a lot. The big question is, where's the entry and when's the timing? Right now, the Kiwi is holding up. Right now, as you can see here, we're really just basing. We've been in this base from 65.40 all the way down to, let's call it 64. Below 64 is an absolute sell, and I think we're going to get there pretty quickly. Once this breaks, again, that velocity is going to go to a -1, -2 pretty quickly. So we just have to wait for this to break. So a break below 64 here, to me, is a nice entry on Kiwi dollar short. Next up, I'm going to take a look at pound dollar. So the question is, okay, where are we in the wave pattern? We had this big move to the downside here, and then we took a little bit of a break and really just based in here. We broke to the downside. So again, where are we? Where are we? And you can see this is a good deal of consolidation here. And we now, this was, the 28th to the 5th, that's like 7 days. We broke below that point. So to me, pound dollar is another sell that's just right there. Now, if you take a look at it over the last 24 hours, you can see that there's a really nice bottom there at 123.10, 123.15, somewhere around here. A break below this point is an absolute sell on pound dollar. What currencies do you want to take a look at, Ankit?
Well, I think you kind of hit the currency pairs I was looking at. I think what we're noticing here is that as what we saw back in February and March and April, the yen was really in play, and it just seems like now the dollar's in play and everything else is kind of getting weighed down by it. That's the difference, where when the dollar gets stronger, it really put a lot of weight on all these currencies. So I think as far as the dollar stays strong, pound dollar looks great. I mean, a lot of low bases that we can find in Aussie dollar or even in the Kiwi. I'm actually going to start to look elsewhere and see, okay, what are the other areas where we can see a move? Dollar Swiss franc. I actually talked about Swiss franc this morning in the class as well. I really like this because, there's a nice trending move taking place. So there's a few things going for this pair. We have this divergence now taking place that the Swiss franc is actually underperforming compared to the euro. So if you take a look at euro Swiss franc pair, we have that pure divergence that's taking place. So whenever you see the divergence taking place, it seems like Swiss franc, which usually do well in risk aversion times, it's not. So this is just telling me that the Swiss franc wants to go lower. So this is a beautiful high base as you drawn over there on a 4-hour chart. I think it seems like it wants to break, and the target, I think it gets to that the parity level. I think that's the first target that we can look for. So technically speaking, really good setup. Now, the question really comes to, and I think I did this whole dollar class yesterday as well. And again, the whole question is where the dollar goes, because if the dollar can actually break out further from here, because it's sitting at a very key resistance level, there's a lot of support or resistance to be broken in a lot of these pairs. So there's room for that to run. I think what we need to be mindful of is to see if that area breaks or not. Another thing, as we talk about, that we have to keep in mind is if the markets start to bottom out, because I think at that time we'll start to see a bit of a change in that regime as well, because right now there's flight to safety, and dollar is being the ultimate safe haven. Usually it used to be the yen as well. Right now it's ultimately dollar. So I just want everybody to keep in mind is that dollar trade would be great until we see that reversal, because I think as soon as we get that, I think we need to start looking at elsewhere. And at that time, I still like the Swiss franc short, and I would love to kind of jump back in. And I just want to, Rob, if you want to pull up like Aussie Swiss franc, or just to give a comparison there. So you can see that this thing, as far as the market goes, this thing is still holding in there. It's not a bad looking chart, but it's just kind of showing it to you that if you want to go long certain things, there's better currencies to trade against. And we had a nice little resistance there, but again, we are sitting at a decent level. We are not sitting at the lows. We are actually sitting at the highs. Same thing, Rob, if you want to pull up CAD Swiss franc, that's another one that I really like. And I think this is another one that could create good opportunity, just making a basing pattern. So I think we, at this point, I'd love to kind of keep our options open. Dollar is the most inevitable trade that we can find right now. But I think if we get a market capitulation, let's say next week, and we get the big break in the dollar pairs, I think that would be the little bit of that last kind of a straw move we can find in the dollar pairs. But I think we could see it next week as a two-part week, where we could see initially we could see some nice movement on the downside in those dollar pairs, but then later on when things start to pick up, I think there will be good opportunities on the upside as well. So I think right now we need to be prepared for both a breakdown and a reversal. So that's where I'm looking at, Rob, and that's how I'll be approaching next week.
Hey, thanks, Ankit. And just to look at one last one, I'm going to pull up Euro Kiwi. So I'm liking Euro, but again, the Euro has to prove it that it's going to break out. But when you take a look at this pair, this is Euro Kiwi cross, and you can see we're breaking out of this nice level. That's a really nice breakout from, again, you can call this an ascending triangle pattern. It's just a really nice breakout. So we could get a substantial move, but again, the Euro has to prove it to me that it can break higher. So if it does, I also like this pairing, but this may not develop until maybe Tuesday, Wednesday of next week.
Hey, Rob, while we're taking a look at Euro, can you pull Euro Swiss franc as well, just to kind of give a context, and this is where, again, we're just playing relative from the weakness. Look at Euro Swiss franc, and if we zoom out, we can see how this thing was in a clear divergence back in February to March, and we almost hit that parity level. So this is, again, a good example to show you like how when these things diverge, they could last a lot longer. Maybe we were noticing that it's already up for two or three few days in a row. I think you can go further up. And right now it's already clear prior resistance level. And again, if you're liking the Euro and you're just not sure what I want to pair with, I also really like Euro Swiss franc here at this point as well.
Yeah, it's a great trade setup. Well, that wraps it up for this week's Currency Room. Nice to see you here. As always, proper position sizing. That's the most important thing. That is everything in trading. Look, we're going to make all these trades. We're going to do all this analysis. And guess what? We're going to be right on some and wrong on others. We have no idea which ones we're going to be right on. That's why we need to position size everything the same. And so our numbers, our win-loss, and our profit factor guarantees us that we'll be profitable. We're not doing twice the biggest sizes on one and then half sizes on others, because all of a sudden now your win-loss and profit factor don't mean anything. All that matters is, did you get a win on the one that you sized the biggest? And if the answer is no, you could have 3 winners that were small and you don't even make up for the loss. So position sizing, so important. As Anka said, this easily could be a tale of two markets. Early in the week, I think it's going to be an ugly market, a down market, risk off, dollar strong. I do think we're getting very close to a bottom. And when that bottom hits, you're going to see really a reversal. So what was the weakest Stuff like the Aussie is probably going to be the strongest currency because it's held up the best. It still got hit a little bit, but it's held up the best. So be ready for that. Be ready for the potential bottom. And if it comes, then we just have to switch our mindsets over, identify what has the velocity to the upside, what has it to the downside, and make those trades. Thanks for joining us. Everyone have a great weekend. Goodbye.